Alright guys, so today's video is going to be on what I class as order blocks. Now they might be a little bit different from what you'll find with like ICT and other traders, but being a self-taught trader, I've always called them blocked orders or order blocks. But I basically used this strategy to pass my first FTMO challenge when my London breakout strategy was failing day after day more than what I've ever had it do before. And I just switched to this strategy. I've spotted it over the last, I don't know, couple of years in the markets, and then just did some really extensive back testing within like a few days, and just started trading this. So I'm going to go through like a drawn out ideal version of what it looks like, and then we're going to jump into the charts. So I'm going to show you exactly what I did to pass through that challenge. Now, frustratingly, this video has taken 6 months to put together. You'll see from one of the videos that the timestamps were from March this year, and then a couple from January. But the rest of it, so the actual demonstration of what's happened, is going to be from today's date, which is August 2021. But nonetheless, this style of trading works really quite well, and I might just stick to doing this. It's a breakout and retest, but I've since modified the strategy, which means that instead of there just being like an entry and an exit, there are 2 entries or 3 entries if need be, to reduce your risk parameters, but you still get a reward which is almost as good as just doing like a set target. But yeah, again, sorry for the video being so late. I've had a lot of personal things going on in life. I had a series of heart issues throughout the year. I've had a baby. There's been a lot of personal things going on psychologically. I'm trying to adjust how I trade and who I am as a person, and it's really taken its toll. So the last 6 months, even though my intention was to create a new video for you guys once every week or so, it just hasn't happened, and I've had this massive creative block based on this video on order blocks, because I realized that my order blocks are probably different from how the professionals do it, because I'm self-taught and I just happen to call it the same word. So guys, we're going to jump into the video. Let me know basically all your comments. Are they order blocks? Are they not? Is it last candle? Is it not? Is it this? Is it that? All of your comments are valuable to me, and I will be going into other people's strategies soon, and I'll be adjusting them to make them even better. And I'm going to show you how I do it, so you'll see from a professional trader's perspective really how to trade, rather than all this bollocks that you see on YouTube at the moment where it's just people jumping on each other's strategies. I'll show you how professional does it. But anyway, thanks again for the patience, guys. I know it's been 6 months, and it shouldn't be 6 months to the next one. All right, see ya.
Okay guys, so I just realised in the video that I'm not explaining the whole concept of order blocks very well. I'm not explaining the concept of order blocks very well, so I just want to try and create a really simple chart to show you exactly how I'm trading them. Okay, so I'm going to use the trend line to indicate where prices get into. Okay, so what I'm doing is working my way up. If I move this along, price is coming up. We break that, we create a new high. Okay, so that's our new high. And then what happens is you'll quite often see a red candle push down and a strong candle to break us through. Okay, this red candle is what I would class as an order block, because all it is a series of orders which are trying to go down in the market, and it's basically just a series of trapped orders. Okay, it's trapped orders of retail traders. It could be some institutional trades in there as well, but it's mostly retail traders from what I understand, and price has just continued up regardless. Now what I look for is for price to continue up a little bit and then reverse back to that area, which was quite key. And it's usually, I will get involved not on a pending order anymore. I used to, but I try to get involved when I see a pin bar form, and it doesn't really matter what color that pin bar is. So it could be a red candle working down, it could be a blue candle, it doesn't matter, but I want to see price basically work its way into, and it normally comes to halfway in this area. Okay, so what you can do if you do set a pending order, what I would do is I would set my pending order to be triggered at the halfway point in this order block, and I would set my stop just a few pips outside of the order block. Okay, so in this example, price comes down, it just about, we're going to pretend that's the halfway point, it just about comes down, triggers you in, and off you go, and it creates a new high. So what happens here is that even though this is a pin bar, this is the new order block. Okay, so you would then want to see new candle come down and grab more liquidity. But what you would do at that stage, as long as you're risk free, as long as you're already locking in profits on your first trade, you would look to get involved on this second trade here as well. Okay, so you obviously this one would be a larger stop loss, but you would be looking to get involved. So at any stage when the market is trending in one direction, so this one is just going north, we would be looking to get involved in this trade and then this trade. So we'd have one risk here, one risk there. We'd be running at a profit. Let's hope that this one then turns out to be a blue one. Oh, it does. Look at that. So what are the chances? Quite high. So this one is now running at call that 2 to 1. This one is running at 5.5 to 1, which means that you'd essentially have 7.5 ish, maybe call it 7 on the table in your favor, and you'd only ever be risking 1 at any one point. And you would also, in terms of locking in your profits, what you would do, let's just extend this. I'm going to show you how to lock in those profits. So those profits now get locked in behind the nearest swing. So in this instance, price has gone up, so we're moving our our new high line. Okay, so with this one, it goes up and then it goes up again. Now we get a bit of I'll just call it a counter trend move, and again another order block is created. But as soon as this high gets broken by this one, we can now lock in our profits behind this candle here. So this area would be classed as the next swing. Okay, so we'd have our first trade running at 6.5 in this example, and our second trade running behind it at 2.5. That's a total of 9, I think, yeah. So a total of 9, and we've got another opportunity for an order block. Okay, so what we could do is essentially, again, this is a fake chart as you can see, but we could set a pending order, let's call it at the halfway line, and we could put this just behind. So essentially, if I get taken out of this trade, yes, I lose 1R, so it could be 1%, it could be 0.5%, these could be 0.5% risk each, but there's no risk on the table. You're in pure profit with that, you're in pure profit with that one. If you get taken out of this, you get taken out of these ones as well, and you're out of the trade. But this is what it means by let your winners run. Okay, so when you hear about the trading gurus like Mark Douglas and Jack Schwager, they talk about let your winners run, and this is essentially what they're talking about. So let's say now that we get moved into this one, and we get another entry. And then we get another break. Happy days. Okay, so we're now in on 3 trades. This one essentially wouldn't be locked in with any profits, and we wouldn't be following with these. With these ones, we wouldn't be moving our profits any higher. And this has just completely transformed my trading. Okay, so this is what I do every night. I'm looking for these scaling opportunities because it's what makes like the month makers, the week makers, and I tend to get 2 or 3 of these major ones, which will be over 15R. I get those maybe 3 times a month, which is staggering. You just have to be able to concentrate. So again, let's I'm just gonna start using these ones from down here. Just makes it a little bit easier. So we're moving our things up. Let's use this one. Now you don't have to worry about this. Let's call this I wouldn't call that an order block, but essentially now, yes, this is now an order block because it's being locked in. There's no messing around on the charts, just very clean. We now move our new high up to here. We're still in this massive upward trend, and what we do is we just move all of our take profits to just behind this nearest swing. Okay, so this is how I'm making the major money in the markets now. So that's now 10 to 1 in this example. This one is 5 to 1, so that's 15 locked in, and with this one that's 4 to 1, that's 19 locked in. And you could say like, oh, what are the chances of that happening? Well, I will reveal at some point my actual trading plan for the Asian session, which I then use in my London session, but I'm not ready to do that just yet. But I just wanted to show you this is how it works with order blocks in a really simple format with scaling in. Now, where would you come out in the market? Okay, now this is something which is this has also revolutionized my trading, but the nearest level is this nearest swing. Okay, so if price all of a sudden decides that it's going to turn around at this stage and breach, yes, it would take us out of all of these, so we'd be up in this case, I think it was 19. Oh, that's quite neat. 19R, which is cool. You'd be quite sad because you'd want to get more, but for every one which it goes in your direction, you're actually adding 3 in this instance because you're in 3 trades. So it'd be 1% there, another percent there, another percent there. That's 3%, and you're not risking anything because you've locked in your trades. However, because this has now been breached, what we'd be doing is we'd be looking at, so this blue candle would be classed as the order block. So what we would want to see is essentially price to come back in, trigger us into a trade, preferably with a wick, so come up to about the halfway point, get us into the trade, and we'll just reverse it back down. Okay, so it would be in a new trade, and as price works its way down again in the future, let's just do this really quickly. So as price works its way back down, we'd now be able to lock in profits behind this swing. So this has been breached, which is good. This is still the high of the area. This area is the breach. I've been gradually altering my trading over the last probably year, and I've been following this sort of methodology, but I hadn't been using the scalings until recently. I learned that from a company called Guerrilla Trading. I learned this sort of scaling method. I knew people like Etienne Crete were talking about it, and I didn't really see it in action. But this is essentially how I've been trading for sort of like 2 years, but without the scalings. So the scalings have made such a difference to my trading. But yeah, have a look at this, and basically you just follow it down using the same format. And the order block here, in this instance, would be this one. So let's get back to the video. Right then, take 30. I have literally made this video so many times, and I'll just carry on screwing up. So this is my last attempt. Now, what I do with my order blocks may be slightly different from like ICT, Q, etc, etc. You guys know that I was a self-taught trader, so I didn't even know candlesticks were called candlesticks. I basically just saw them as lines and lines. It was like not even bodies and lines, it was just lines, and I think I called them blocks. But basically with my order block trading, it's just a way of getting involved with trends. So making sure that a corrective trend, I can jump in at several different opportunities. Now, it's not recommended in every single scenario, and as you know that I am a scalper, I tend to be in trades for maybe like an hour at the most. Usually 15-20 minutes, it's all I can stomach, it's all what I like. And I like to be able to just do my trades for an hour or two, literally go through all the pairs which I like trading. If there's an opportunity which I can spot, I'll get in. I'll scale in as many times as I can, and as soon as I'm taking out the trades, I go off and do something else for the day. It's essentially my working shift. Now, what I'm going to show you is exactly how I do that, but I'm going to go through what I was doing during the Asian session, and doing this exact style of trading is what made me pass the FTMO challenge the first time around back in February this year. Now, with this, I use the term order block, okay? And essentially it is a block of an order. So somebody is, for example, we're going to see in a moment, the first order, somebody is trying to go up, and that has been blocked by moves pulling it down, okay? So that's where I refer to an order block. It's like a stop, you can't go in that direction, we're going to drag it down this way. But it should start to make sense to you. What is otherwise known as is liquidity grabbing. I quite often just refer to it as grabbing or purging or something like that, but it's basically when a series of retail traders are, for example, going to try and buy and price gets dragged down a little bit lower by the bigger orders. Once price comes back to their break even, they sell their positions and cut their losses and go, whew, at least I've been able to get out of break even. But what that's been able to do, along with the additional sells from there for the guys who are doing the break and retest strategy like me, is that it then funds the move to move further down lower. So we're going to go into how I mark up my charts, how I use a sort of like a high and a low bar on my charts as well, just so I can keep track of where everything is, and really that I honestly just don't care about the overall trend of the market. Like I know a lot of people here have said in my past videos and stuff, and I value every comment which I get, by the way, but some people have said like, oh, you know, you should look on the hourly, you should look on the daily. Like I don't really care, because the market, I'm only in it for like 20 minutes to maybe a couple of hours, and it doesn't actually, in my backtesting, it doesn't make much of a difference. So what we will do, just for everyone else's sake really, is I'm just going to bookmark where we want to get involved. It's over there. And we're just going to go back and we're going to look at which direction the market is going in. Okay, so the market is clearly going down. All right, I think that the market's on its way down. So we're going to be looking predominantly at shorts, but you can see in a minute just how quickly that can change. This area is technically going to be the spread hours in the UK. Spread hours kicks in from here all the way to here. Okay, so 3 hours of spread hours. Okay, maybe not even 9 o'clock, it is sometimes 10 o'clock, so that's where spread hours actually kicks in for the pound dollar, but I still class it as 9 o'clock because that tends to happen with the rest of the pairs. But nonetheless, that's spread hours. There's a bit of a range in there, but what can you see? I basically try to follow patterns, so I'm a pattern trader predominantly. Now, if you look at how a market tends to trend, okay, let's say for example you get an impulse up, then you'll get a bit of consolidation, and then another impulse, then a bit of consolidation, then another impulse. That's generally, not always, but generally how the market tends to move. Okay, you get bull flags and bear flags and things like that. And what you can also get is price going like this, just moves sideways for a bit and then continues. Okay, so you get yourself a nice little rectangular range, which I also love trading. What else can you get? You can get the market sort of narrowing and then taking off. And then you can also get, what is it? It's basically the opposite to that. And then it takes off. So there's a lot of continuation patterns in the market, but there's also a lot of reversal patterns. Now, what I tend to look for, especially around 1 o'clock in the morning, if I'm doing this style of trading, is I'm looking for a breakout of structure. Okay, so I will mark on my charts a high and a low. Okay, so all of this, so you know this this grey box is essentially the spread hours, but we're going to ignore that now and just get rid of it. But what I can see, let's zoom in, is price bouncing along this yellow line here. It's come up, it's failed to create a new high. The high is actually over here. It's failed to create a new high, but it then bounces off of this area. It's not created a new low. I'll tell you what, let's straighten that out. It's not created a new low, it's come up, it's not created a new high. So we've got, let's call that a high, that's a low, got a low here, we've got a high, we've got a higher low, we've got a lower high. So essentially what the market is doing is it's just bouncing, it's getting narrower. So you know where I was showing just a minute ago the different types of reversal patterns? This is like a narrowing pattern. What we're looking for is we're looking for a break, which obviously we can see, but we get the break on this red candle here. I'm going to try to zoom in, make it a little bit cleaner. Now, we get the break on this red candle originally, a very small break, but still a break nonetheless. And what happens at this stage? Well, it confirms our most recent swing. Okay, now the reason why the swings are important is that, as you will see from the fictitious drawing that I did, which I'd recorded 6 months ago or so, is that that's where we put our stop losses. Okay, so this is where our high is going to go. Our new low is technically down here, and we still have this very obvious area where it's like a support resistance, because price bounced off here for like 10 minutes, it bounced again, and then it just had a break and price has come back into this area. Well, what we can't do is we can't announce this as the most recent swing until this one has been broken, right? So until this low has been broken by price, which it does over here, we can't confirm this one. We still just currently have this one, because when this one broke this support resistance line, we could then confirm the most recent swing. I know it's a bit of a complicated one to get your head around, but bear with me, it will get a little bit more simple. Okay, so what we've got is this area has now finally broken. Okay, I'd be watching this thinking like, yes, okay, I'm happy with this. And oh, just in case you're not sure when spread hours finishes, there's usually a volume increase. Not massively, but there is a volume increase at 1 o'clock or at midnight. Depends which pair you're looking at. Now, if you see along this bottom line here, volume is tiny, no volume, no volume, no volume, more volume, exactly at 1 o'clock. This is the end of spread hours, okay, this red candle here. Alright, so just to make things a little bit easier for you. Okay, so that's your spread hours finishing, which means that you can now get involved in the trades if you want to, and you can look back and see where are these order blocks. Now, an order block essentially is where price needs to return to. So you'll get price going in a particular direction, like what I was showing a minute ago. So let's draw this out. You got price going in a ascending or descending nature, and then a large drop off, for example. Now we want to know what happens within this final bit, this final bit before the large push down. In this instance, we'd be looking at the last candle or the last few candles going up. So we'd be looking at the blue candles before the red ones. Now, what I tend to do is I tend to circle around those last candles and just wait for price to come back to it. If it comes back, and when it does, it's normally just with a tap in. It's really strange. Price will just come through, pierce it, and then just use all of its juice in there to shoot off in the other direction. So a typical order block in this instance here would be there. Okay, so what we've had originally is price has broken this new low, so it's created a new low, it's worked down. Yes, it's with a wick, so I wouldn't look to get involved with this one because in my eyes this looks like it's like a reversal signal. But if you did, you could set your order essentially right there on the start of what I would class as an order block, which is the start of these blue candles. Now, I could say it's the last candle, which is that one, but technically speaking, that's four blue ones in a row. So I would class that whole area as the order block. And to be fair, it's still only 3 pips. I would probably do this as a trade. It's only a 3 pip stop, okay? Now, as soon as this has been pierced, you could literally say, right, that's the order block. I'm going to set my order. Let's say, you know what? I wasn't going to use this one, but we're going to use it, okay? Because it's in, it works. Then what do? We get price going. I will change this in a second, but we get price going up, and now we want this one to be broken. So this low area, we want this to be broken before we could lock in any of our profits, okay? And bear in mind that because this is over like the midnight hours, this is over the Asian hours, your spreads are going to be naturally a little bit wider because there's less people trading these markets. And with this being the pound US dollar, if you're using an FTMO account, you're usually looking at 0.4, 0.5 pips. It's quite wide, it's a bit of a nuisance. If you're using Pepperstone like I do on your personal account, it's like 0.1, 0.2. So this style of trading really does work. If you're using another broker where you've got a spread of 1.2 to 2 pips, maybe look at getting a different broker because you just can't trade on the 1 minute as effectively. Can on the 5 minute, can on the hour, and so on and so forth, just not on the 1 minute. It's just my personal impatience and desire to get such a strict entry. Okay, I want to get like the tightest entry possible and then ride it on maybe the 1 hour or the 4 hour if I can. But that's another video for a different day. That's scaling down from scaling up. Hard to describe at the moment. Well, okay, let's continue this. Okay, so what's price doing? It's working its way down. We get a nice drop off of here again. So we are going to move our low, which is our next area, which we want price to break down below. Because what do we want to do with this? We want to be able to lock in profits if we can behind the nearest swing. And if we can, we want to get involved with a new order. We want to try and get a second order on there so we can essentially scale in. Now, you guys will see in the footer, there's a, not in the footer, in the description or you know, in the pinned comment or whatever, that I am part of a trading community, which is really good. It's helped teach me about scalings and stuff like that. Now, if you want to get involved and learn real good like golden nuggets, feel free to use my link. It's an affiliate link, so it does well for me and for you, I think. But essentially, I learned about the scaling style of trading through them, which is it's helped my trading no end. Now, what I want to do here is essentially I would look to get involved here. Okay, this is what I would class as an order block. It is the last candle before the drop off. Okay, yes, we got a break. It was only a slight break and then a pin bar, but thing is that price is still moving down. Okay, price is still working its way down. So this is our next order to get involved in. And some people will say like, oh, but Paul, you know, you've still got risk on the table. Well, I have, but it's 0.5%. It's hardly going to cost me anything here. So, you know, if I wasn't involved in this first one, I would definitely be getting involved in the second one. If I was involved in this first one, I'd probably be doing a 0.5% risk on this second one, but we're going to do it as if it's a full percent. What do I do as well? I'll include the wick on this one because it is only, what, 1.2 pips as a stop loss. Okay, so prices come down, it's created a new low. I set my order immediately on there, and then within 5 minutes, what do we get? We get tapped into that trade. Now, what you can do, something which I've started doing lately, is let's say, for example, from a risk parameter style of trading. Now, you could literally set your order as a full 1% on this at the moment. So 1%, and you're tagged in and you're risking 1%. So if it comes up to your stop loss and it takes you out, you've just lost 1% of your account. What I've started doing is I've started risking 0.5%. So 0.5% just to get tagged, and then 0.5% once I've got the confirmation. So the confirmation one, you don't get as big of a risk reward ratio, but what you do get is you get your confirmation to say, I'm now really comfortable to be in this trade, and I'm glad that I've got a bit in at the very best level, and I've also got a bit in where it's like, I'm really glad that I'm involved. So my second order would essentially go in here, and the stop loss would go behind the top of that candle. Okay, but we're not going to do that for this demonstration purpose because that will just overcomplicate things. But essentially, I'd now be in for a full 1%, but I would have twice the amount of orders on my chart. Not to overcomplicate things, but from a risk mitigation, that is such a good way of trading, because if price, let's say for example really quickly, that if price just came out and just took me out, I'd be out for 1% if I was using my old methodology, and that's fine, it's still only 1%, but when you're using an FTMO account, technically speaking, that's 10% of your account. So what I wanted to do was get involved with 0.5%. You know, if it's my personal account, 0.5%, I literally don't care. Like 0.5%, I could take 20 losses in a row, won't even bat an eyelid to it. FTMO account, technically speaking, it's now just 5% of my account, okay? So it just makes it easier. So I'll have double the amount of trades on there as I would have done previously. So, right, okay, let's continue this because I don't want to overcomplicate things, but I just want to show you how much you can get out the market. Now, bear in mind, the days where you get, you know, 15, 20% trades, they do happen, you know, maybe 3 to 5 times in a month. Not always, and some days you will lose, you know, you'll lose. As soon as I lose now 3 trades in a row, I'm done for the day. There's no more trading in that session anyway, or I won't follow that trend on that pair. I'll look for a different pair where there's clearly a trend moving. Now bear in mind, I'm only using the 1 minute candle. You tend to spot these really quite often. So you can jump from the pound US dollar to the Australian dollar Japanese yen, or the Kiwi Swiss or something like that. Something crazy, but you'll spot little breakouts like this happening all over the place, but it's so effective. What we're doing now, we are essentially waiting for this low area to break so we can lock in a bit of profit. Now as soon as this breaks with this candle here, we're essentially, you don't have to use these high and low bars, by the way. I've recently just taken them off of my charts and it's so much cleaner. But essentially what we can do is we can now lock in some profits back behind here. So this first trade, we are in basically on break even. So I'm just going to move that back here. That one is in at break even as well. So we're both the trades are both in at break even at the moment. So what do we want to do? We are looking back again to see if there's any other order blocks which have not been what I call purged. So there's nothing being purged yet. So what we've got is the last candle before this drop off, which is essentially here. Now I want to go wick to wick, so end to end. Okay, now unfortunately this had already happened, it's already taken place, so we wouldn't be getting involved in a trade there. So that's one order block. Okay, oh yeah, by the way, just as a little bit of like tidying up your chart as you're going on, I would remove these order blocks as I go along. Okay, so I would literally, once this one's been purged, I just get it off my chart. Once this one's been purged, I get it off my chart, just to make it nice and clean. But just for demonstration purposes, I'm going to keep it here just to show you how many opportunities there actually are. And this one, okay, that one's not actually an opportunity because it's already happened, but price could return to it. Where's the other order block which I can see? Well, there's one right here. And essentially what we can do is we can set our order immediately straight on that line. So as soon as price has broken out of this low, we've got, what, 3 minutes, price breaks, and then we've got 1 minute to place our order. Okay, it's not much time to get that order placed, but we're just going to get it locked in there. Now, the stop loss is 2.2 pips. It's going to be about 2 pips after your spreads have taken effect. But we have now got involved in this trade as well, because price has come back up, it's tapped us in, it's just essentially purged this order block, in my eyes anyway. What do we do now? So because we can now start looking at locking in profits behind the nearest swing, we need to actually find the nearest swing. So price is now, as you're looking at it, there. Okay, we're now in the trade. Where is the nearest swing? Well, if we clear out the charts temporarily, where is the nearest swing behind here? I would say it's behind this candle here. It looks quite clean as a bit of a pullback. So we are going to keep everything where it currently is. So we're now break even on 2 trades, and we've got a third trade running. Okay, so we've got on the table a risk of 1. Okay, so 1 R is being risked. What do we do now? We look for the next break, and that break happens with this nice red candle here. Okay, we put our stop loss probably behind that one, because that, when we clear up the charts again, looks like the nearest swing before the next drop. Okay, so I would now be looking at moving my stop losses behind this one, give it, 0.1 or 0.2 pips, just to give it that little bit of room to maneuver. And this is where the magic happens, because we're in with 3 trades as it stands. So we've got the first trade in at 2, so we're running at 2 to 1, which is super, locked in by the way, 2 to 1. This one's running at 4.5 to 1, and this one's now running at 0.5 to 1, so that's 5 plus 2, we're up 7. We're up 7% at the moment. The drawback is that we are running, okay, so our live draw is going to be, I know we said we're at 7% locked in, but we're going to be running at, call that 2.5, that one, call it 6.5, that's 8, 9, 10.5, so that's like 10.5 there. Okay, so we're always going to be running at more profit than what we've got locked in, and it's so tempting just to cut all your trades and walk away. But the thing is, we just don't know how far this trend is going to go. In a live condition, you know, we should be doing the bar replay, but unfortunately, because this was recorded in mid-August and the charts are from the start of July, I can't do bar replay back this far because it would just cut everything away from us. So we've just got to use it as we can see it, frustratingly. But in a live chart, you just don't know how far it's going to go. You could get a black swan event where literally price just plummets 70 pips in the space of 10 minutes. And if you're in with a 2-pip stop loss, you've just made yourself 35% by being in the trade. But if you decided to cut your trade, you know, when you're up 5% because you thought, oh yeah, I've just made 5%, and you miss out on that additional 30%, you're going to want to curl up and die. Like, you're not going to want to trade again for the week. You will be so frustrated. So we allow the market to take us out. We don't set targets, okay? And we do not pull our trades early. Anyway, so what we're going to do is we're just going to be working down with the market, okay? We're literally waiting to create new lows, new lows, new lows. Now the thing is that nothing here is saying counter trend to me, okay? The market is just breathing, okay? The market needs to, as we were showing before, when it's working its way down, the market needs to breathe before it can continue its journey down, okay? It needs to create these sorts of channels, and that's literally just a characteristic of Forex. Even with crypto, what people are talking about, buy the dip. This is the reverse dip, effectively. Now what we've got is we've got the high, we've got the low, and price, you know, all the way down here is going to be looking like you're up about 20% at the moment. If you're following the price down here, you're up about 20%. Now, what we have got is a high. Now we can literally mark out the last candle. The last blue candle is this one. Oh, look at that. We have ourselves another entry. And again, what do? We literally just sit and wait. We just sit and wait before we get tagged into a trade. Now what happens once we get tagged into this one? We can then start waiting for price to either take us out and go up that way. And if it does, then what we're doing is we're waiting for a... Once this high has been broken, we're literally waiting for a grab of liquidity from this order block. A little bit like what we've had here. Okay, so this was a little liquidity grab, but this is like a fake out. So, you know, I'm going to create another video on which ones are the best ones to take and which ones are the worst ones to take. Well, this will be the worst one to take, because what we haven't had, okay, with this is we haven't had a break of this high, which means that this order block here, which is the last move down, and it gets liquidity grabbed from here, these guys, I can almost guarantee, will be retail traders going, oh, that's an order block. So they've bought, and what happens? Price just plummets past them because there isn't a new high. We haven't actually had a change in direction. So, you know, that's just an example of it going wrong. All right, so what we're doing, we're waiting for price to come down, and we do get a little break, a tiny break, but we do get a break nonetheless, which means that the trend is continuing down. We've got a lower low, which means that we should be looking for the lower high. Yeah, so where is the next turnaround? So we work backwards, and we can see clearly there's a little bend here. Okay, so we put our stop losses just behind here by, like, you know, half a pip or something. So we've got our most recent trade at a 1-to-1 at the moment. We had our third trade at a, we call it 1.5. We've got this trade running now at 6 point, call that 6.5. And then we've got our first trade running at, call that 2.5. So we're up 2.5 plus 6.5 is 9 plus 1.5, 10.5, 11.5%. We're up by 11.5%. Okay, but now here's the kicker. If you had everything down here, it would literally be like double the amount. You'd be up 22% at the moment. It would just be running at 22%, and you'd be thinking, oh my god, I just need to lock in. I need to lock in my trades as close as I can. Now, I don't want to lock anything in here closer, because essentially this is the swing. So what do? We wait until the low has been broken again, and then we go back for our nearest swing. So our nearest swing is now here. Now we're just going to go from 11.5% all the way to, let's do it there and there. Okay, so we went from 11.5%, and you know what, just before we tally this up, we get taken out right here. Okay, so price comes back up and it takes us out of these trades. Okay, but we go essentially, let's make this look a little bit more pretty. Looks a mess, but hey. The first one, call it 4%. Second one, 10%, that's 14%. Third one, 3.5%, that's 16.5%. And the fourth one, call it 4%, that's 20.5%. 20, just call it 20% or 20R. So you've made 20R in a time frame of 1 hour 31 minutes, and a grand total. The market has moved from when you decided to get involved, which was this yellow bar. So the market has moved in total 12.3 pips, and you've made 20% on your account. Absolutely crazy. Now that is how I use order blocks. I call them order blocks. Again, please do correct me if I'm wrong. If they're not called order blocks, then correct me. I know that there's all this stuff about Wyckoff and smart money concepts and all the hype at the moment, and yeah, I do believe in a lot of it, but the truth is, do you need to learn all that stuff, or can you just look at market entry techniques like this based off patterns? To be fair, I don't know how this has taken me 3 years to really sort of piece together, but it's just come from noticing how the market moves. Okay, the market rarely ever goes perfectly like that. It doesn't just bounce off the the most recents or anything. Price tends to work a little bit more like that. It's very, very jaggedy, but to see where it was reaching on its pullbacks, it's not using Fibonacci, it's not using moving averages. You can if you want, just in case you're not sure which direction the market's going in, flick on a 200 moving average or a 50 moving average, just to say, like, in this instance we should just be selling, and obviously just selling did us some favors because we ended up getting up 20% in this day in particular. Bear in mind, by the way, yes, I kind of cherry picked this because it stuck out at me, because I saw this flat area here, but there's going to be other days between, July the 1st and August the 12th, which I'm on now. There's going to be other days where there were bigger wins than 20% in an evening. And how long was it again? I've forgotten. An hour and a half. An hour and a half to make 20% on your account. Find me a better strategy, okay? And also, I know that we're going to get in the comments, but I want you guys to figure this out. There's going to be days where you lose. There's going to be multiple days in a row where you lose every trade. How do you not get involved in the ones which don't work? Well, you can't guarantee that you're going to get a winner every time. I can't guarantee. The worst losing streak I've had on this is probably about 12 losses in a row. It sucked. It really did. And then I had to figure out, okay, how do I determine what a fake out? Where are the fake outs? Should I use an RSI? Should I use a stochastic? Should I, then multiply that against a moving average or something like that? Well, it comes with experience, but I want to see what you guys want to put in there, and I will go through and I'll do an experiment. I'll test your comments and your suggestions, and then maybe that will be the basis for another video. But just to help you guys determine what to do when you're live trading yourselves, a little bit like what I'm gonna do at some point in the near future. So I will do live streaming. I just need to figure out how to do all the graphics and shit. But generally speaking, as these areas have been purged, all what you want to do is literally get rid of them off your chart. You just don't want your chart to be messy, and you want it to be really, really simplistic. Just a little tip with this, okay, you are looking at 1.2 pips there, 2.2 pips there, 1.2 pips there, 3.2 pips there. So you're looking between 1 and 3 pips as a stop loss. Okay, now that is extremely hard to calculate 1% of your account. A tip which I would strongly recommend, something which I do, is just use a standard stop loss. Now I'll use a stop loss of 2 pips. Now I need good leverage on my account to be able to do that. My leverage is 100 to 1. If you have 500 to 1, you're good. You can get a lot of scale-ins. I can get in at the moment 2 scale-ins. So I would have that first trade and the second trade, and I'd just be following it down. So I would have ended up on this evening with about 14.5% in the period of an hour and a half. Okay, so 14.5%, not too bad. If you've got leverage of 1 to 30, like, you know, if you're using Pepperstone UK, like on my personal account, you'll get 1 trade out of this, you know, because your leverage won't allow it. So what you can do is you can flick on to the, say, 15 minute or the 1 hour, where you can have a wider stop loss, which means that you can have more trades going on basically at the same time. But here we go. Here's an example. I promise, I promise I have not looked at this chart. I don't really use the 15 minute anymore. Let's clear that off the screen. But here is an example of the last bar or an order block taking off before it moves. So we had price coming down, it had like a little uptick. So you know where I was saying that price has to go like this a little bit before another drop off. Like that. Quite ugly, but it works. What's price done? Basically worked its way down. It's literally just done it again. So there you go, on the 15 minute, that's a 20 pip stop. And you're in the trade. And where would and this trade would run all the way down to here. Until you're taken out. A 3 to 1, there's a 3 to 1 right there, literally just spotted it. Nice and easy, there's a 3 to 1. But yeah, I will do another video in the near future on the ones not to get involved in, the ones which you should get involved in, you know, when there's a strong impulse after a consolidation period. They all count, they all matter, but it literally works on every time frame, every currency pair which I've found. It works on gold, I've done it on oil. I don't trade other things like wheat, I don't trade stocks, but it probably works on those as well. But I haven't backtested it, so don't take my word for it. But guys, look, long video for sure, and it won't be another 6 months until my next video. There's just been a lot going on in my personal life lately, so I really do thank you for your patience. I do hope to make more of a success of this channel in the near future. There's a few people who I was watching back in January. I was their first 10 subscribers. One guy has just made the other day, I think it was like 90,000 subs in 6 months, so hats off to him. He's the bald American guy. So well done, mate. But yeah, absolutely awesome. Thanks. Questions? Stick them in the comments.